Do you want to organize your finances, create wealth, and transform your wealth into a legacy? It's time to start today.
Welcome to Octane. My name's Andrew Wall. I'm the managing partner of CPA for IT.
And I'm Rachel Stedman, head of customer care.
Our new podcast designed to give your small business the fuel it needs to succeed. Welcome back, everybody, to another week of Octane. I'm joined once again with my beautiful co-host, Rachel Stedman. It's been a long time, Rachel.
I haven't seen you in forever.
It seems like forever. But this week we're here to talk about corporate bank accounts, corporate credit cards, why we need to set them up, and how to leverage them to take advantage of these tools to help you organize your finances, create wealth, and transform wealth into a legacy. First, let's start with the corporate bank account. This is sort of a necessity, right? I mean, you and I know, and Rachel, for those of you who don't know, has some background working in the banking sector. But you can't deposit a check written to your corporation into your personal account, can you?
That is correct. Yes. So, I mean, whenever we're looking at from the startup, a lot of individuals come and they say, okay, well, like I want to set up a bank account or, they're looking to set up a business. And I said, okay, well, hold on. We first need to set up the business before we can set up the bank account. Said you can't exactly go to a financial institution and say, hey, I want to set up a business bank account, but the company doesn't exist yet, right?
Yeah, because you need your articles of incorporation. There's a couple of key pieces of information you need to bring. So what are those information that you need to bring with you to the bank to set up your bank account?
The key thing from a registration side of the business is that you do need to have your articles of incorporation. So the articles of incorporation will show that the company exists. Okay. The articles of incorporation also do list who are the directors. So this is who's identifying, well, who can be coming in and opening a bank account for this particular corporation, right? So of course, if you're listed on the articles of incorporation, you would need to go in with your ID. Now, many different financial institutions may have their different policies in terms of what you require, but the basis is you need ID to show who you are. Okay.
Yeah.
The basic address, etc., to be able to open the bank account. Sometimes when you incorporate a company as well with more than one director, so more than one person is listed on the articles, some financial institutions do want, both individuals to be coming in and being able to set up that bank account. Okay. So, I mean, once you go into the financial institution, you set up an account. I know sometimes clients ask, well, which is better, which financial institution? And I say, look, you want to shop around.
Whoever's closer, whoever's open later.
That's a lot of times I tell clients, there definitely is a little bit more ease opening a bank account, a corporate bank account, where you do your personal banking. It makes it a little easier. You don't want to be at your business bank account as one institution and you're personally another, and you need to transfer money from one institution to another. So it definitely does make it a little bit easier. They may be able to link your accounts so that, it's a little bit easier for online banking. So that's really where to start. I say try going to where you're already comfortable doing your banking, right? And then once you set up the bank account, all individuals are entitled to open a corporate bank account. Okay. Where that becomes a little bit hard once you set up the bank account is, a lot of individuals, when they go in, they say, okay, well, I also want to set up a corporate credit card with my bank account. And that's why I say that's where you might find a little bit of difficulty sometimes, only if you are a new company, right? Because they want to see, well, wait, there's no income coming in.
There's no history. Yeah.
There's history. They may not extend credit to you. But if you're going somewhere where you're doing your personal banking, they may look at your personal finances and use that to be able to extend credit to the business. So, I always tell my new clients, 9 out of 10 people will not get a corporate credit card right off the bat. So don't take it personal. Okay, it's not you. It's just because sometimes maybe they want to wait to see a little bit of history in your corporate bank account, over a certain period of time to see, okay, money's coming in, there's some activity, and then they might extend that credit to you. So, the first start, however, is of course that corporate bank account, and then really look into sometimes again the credit card and, looking at what the points are, which I know that's something that excites you.
That is something I'm a big fan of. Again, we got some videos on our website and on our social media, and link back to the Prince of Travel, who I think has got this a lot more figured out than I do. But when it comes to these credit cards, I think one of the things that I've learned from my own personal experience is that you're absolutely right. Going into the bank that you have a personal banking history with will help improve your probability of being able to set up a corporate credit card. Because we have had many clients over the years who've really struggled to set up that corporate
Yes.
credit card. Whereas I was able to, through TD and through their TD Travel Rewards card, they set up a business card for a new corporation that I had that was relatively new very easily, which was nice. In addition, everyone, well, not everyone, but a lot of people may know that I'm a huge fan of American Express because of the reward structure. It's hard to beat them as all the benefits that they have with their different credit cards. But aside from those point structure, the difference between an American Express charge card and a credit card is it's not actually a credit card. So it's not based on your credit history. It has a whole bunch of different rules and regulations. So therefore, it's a lot easier to get a American Express charge card. Like the American Express Platinum is a charge card, not a credit card. Now, for example, the American Express Marriott Bonvoy is a credit card, not a charge card. So again, they're going to be looking more towards your credit history. And it might be harder to get if you don't have a history with American Express. But again, once you have a credit card with American Express and you've built up some reputation with them, going on to create that corporate card, as long as you're a director of their corporation, is a lot easier. So that's some of my personal experiences. Again, if anyone else has had other credit card processes where they found it easier to set up, I'd love to hear that. But like I said, TD and American Express were those easier sources that I found. And Rachel, like I guess we've talked about, you obviously need a corporate bank account to be able to deposit those corporate checks. I mean, if you were doing cash, maybe you could do depositing into a personal account. So, I mean, what are the problems with using a personal bank account to manage your business, sales and expenses? And what are the problems also on the flip side of that with a personal credit card? Because we do see a lot of people who
Yes.
aren't able to set up a corporate credit card, who use a personal credit card either exclusively or partially for business. And so what are the downsides to that?
So here's the thing. I like to tell a lot of my clients, you have to remember, you're a business, right? You need to look at and operate like a business, right?
Yeah. If
You
you want
have
to be
to
treated like one, you got to look and act like one.
exactly, right? So, you have to realize that there's a clear separation between what's personal and what's business, okay? And more so, it's important because from a tax perspective, they are different. They fall under
Yeah.
two different taxations, right? So it's like, I tell clients, if you have company money going into a personal bank account, okay, if you want to treat this all like it's personal money, well, what if Siri comes and taxes you like it's all
It's
personal money?
personal money. Absolutely.
Right? So you really need to keep that in mind, right? It is important that you are separating because whatever money that the company makes, it's like I tell my clients, this is not your money. It's not
Yeah.
yours. You may be working for it, but it's company money, right? So really that clear understanding of what's company and what's personal. So all of your income, okay, for the business should be going through a corporate bank account.
Yeah.
Not to mention, as you mentioned, Andrew, which is valid point, that if you're coming in with a corporate check and trying to deposit it into a personal account, well, wait a minute, that's not payable to you personally. So
Yeah.
financial institutions won't be able to even deposit that,
Yeah.
deposit any checks into account that's not in the name of the business. Okay. Of course, we've kind of phased out of checks a lot. So a lot of it is direct deposits. I mean, I definitely have seen that sometimes individuals have used, their personal direct deposit information, for
Yeah.
getting
Or
payments.
personal PayPal accounts is common too, which is
Ugh,
becoming more and more of an issue, right? You got to
Yeah.
set these things up as corporations. And
it
this
does
is
happen.
really, really critical because first of all, there's the possibility that CRA might not accept that this was business income, even if you do eventually flow it into the corporation, which, sometimes that's a bit of a workaround if you mea culpa made a mistake, put it into the corporation, and then we'll say it was transferred and held in trust, which is not an ideal. I don't want to be in a situation where I have to be sitting across from CRA explaining why we've done it wrong,
Yeah.
right? And hey, it was a mistake. I'm sorry, mea culpa, and we've corrected it, but this is the way it should have been done. And the other thing is, if you don't move those funds into the corporation, one of the largest advantages of a corporation is that it's a separate legal entity and it's taxed at a different rate. But if you've
Yes.
taken all your money out of your corporation, which is effectively, if you used a personal bank account, you've effectively taken all the money out of your corporation, then I'm limited as your accountant as to what strategies I have to minimize your tax. I can't have it taxed at the corporate tax rate of 12.2%. It's going to be taxed at your marginal tax rate, which could go as high as 53.5%. So, that's a very, very costly mistake. Number one, from the banking side of it, on the revenue and the profitability standpoint, but also on the expense side.
Yes.
If you have any expenses that are somewhat, let's call them gray, leaning towards the personal side, it's going to be harder for us to defend that it's a business related expenses if you've used a personal credit card. And for example, like one of the things that people don't think about, but with some of these credit cards that I've talked about with the Amex, which give you all these amazing perks, they're not cheap. The $500-600 for the credit card fees, which you more than make up for, trust me, in points. There's lots of programs to tell you why and how. But that expense, CRA could say, no, that's not deductible in the corporation because it's a personal credit card.
Yes.
And so I'm not going to say, no, you can't deduct it. And I'll allow you to put it through, but that doesn't mean CRA accepts it.
Yeah,
And
they can contest it for sure.
yeah,
Mhm.
and we want to be in a position where we have less things to argue with CRA
Your
about.
best foot forward,
We're
right?
best foot forward. That's exactly right.
And I mean,
And
even in
so
terms of the expenses, sorry, Andrew, don't mean to cut you off, but even with the expenses, why it's so important to have, that corporate credit card. Again, going back to that separation, right? Because, when we're looking at it from a bookkeeping perspective, in terms of tracking your income and tracking your expenses, if you're commingling your
it's a
business
mess.
and your personal expenses under your
Yep.
personal account, you are 100%, it is a mess. That's
Right.
exactly what it is. Because at the end of the day, now you have to go and try and backtrack and figure out what is
What was
business.
that purchase at Costco? Was it for business stuff or was it for my groceries? I can't remember.
Exactly. And what I tell clients too is that when you're purchasing something on the spot, when
Mhm.
you make a conscious decision to pull up that corporate credit card, that's business, right?
Yeah.
You didn't accidentally. So when you see again a commingle and it has an Amazon, or like you said, Costco, and
Yep.
it's on your personal account, was this for my groceries or was this for the furniture I bought for the business, right?
Yep.
It makes it more difficult. Whereas when you're paying for it and you took out that corporate card, that's business related, right? So it's giving you that peace of mind that everything related to the business is there. And the other thing which is good in terms of we're separating it, sometimes I tell clients when you're buying something and you're not sure, you're not that quite sure, is this business, is this personal, guess what, you can put it under the business. Okay.
Yeah.
When we're doing the tax return, we can say nice try, that trip to the DR, that's not business related, right? Versus if you put it on your personal account and you weren't sure, well, nobody's
We're
looking.
not going to ask you. No one's
We're not
looking
looking
at
at your personal accounts, right? We're
Yeah.
interested in corporate accounts. That's what we're taking a look at. So then
Well,
you
and
look
and
at-
we're obligated to reconcile corporate credit cards and
That
corporate
is
bank
correct.
accounts.
that is
So we
correct.
have to check through those. And one other thing I would also like, I love that you're like, hey, choose which credit card. I would challenge you to, even if you were going through Costco, Canadian Tire, the Bay, and you're doing some personal and some corporate, make the cashier take an extra 2 seconds and ring them through on 2 different credit cards, or even if, and that way you've got that division of church and state, so to speak, because I've seen people be like, I think some of it was business, some of it was personal. I don't really remember what was what. And then you got to go back through the receipt and look at it. Now, one of the other points I do want to make is that actual receipt is critical. I know a lot of people like to do their, their bookkeeping from their credit card statements.
Yeah.
Particularly where the Amex business accounts, they give you those like nice summaries at the end of the year. Unfortunately, that's not a valid source document. It doesn't have that line item detail. Like, so for example, if someone wanted to go back to look at what did you buy at Costco? What was the line item so that you could figure out what's
Yeah.
business and what's deductible? You really need to have that original receipt. And that's why we do provide you Receipt Bank, or now called Dext, free of charge to all of our clients. Go check it out on our website, cpa4it.ca/receipt bank. I'm sure we'll be changing that eventually to /Dext. But it's a great tool to be able to, like, while you're in line and you're purchasing those things, they've given you the receipt, snap a picture. And then if you do ever, for whatever reason, let's say you haven't done that division of business and personal, you at least have that original receipt. You can go back and look at the line item detail, which is, first of all, important for you to be able to make sure you know what the items were that you bought at Costco that day, if you can't really remember a month, 2 months, 3 months, 12 months later. But also, if we ever are sitting in front of CRA and have to defend an audit, we will need those original receipts.
Definitely.
So the credit cards, because we can link them to QuickBooks Online and it will pull in those feeds and we can do bookkeeping really easy. That's amazing.
Yes.
But that doesn't solve our problem for being able to have the documentation to defend that bookkeeping down the road.
That is true. That's true. It's funny because with a lot of clients, I do talk to them about, services. We offer, this audit representation when we are there ready to fight CRA to maintain those expenses, those deductions. But on the receipt side, we need clients to have those receipts. So it's not, I had a client once say, well, why would you guys be offering Dex for free? And I said, well, it's easy because we need you to help us help you, right? That's what it boils down to, right? We need you to just take a picture, just capture that digitally so that we have all the ammunition that when CRA comes knocking, not when, but if, knocking at your door, that we have all the support and documentation. So that's definitely one of the big things that I do say that does hinder us a little bit when clients are not keeping those, those receipts. It definitely does become a bit of a challenge. Okay.
Yep.
And many clients, they'll say to me, but it's a credit card. It says, I'm like, yeah. If you look at any statements and it says Amazon, can you tell me exactly what you bought on that day? I know. Here's the thing, though. Some expenses may seem really self-explanatory. I've had clients challenge and say, well, it says, Esso, or it says, Starbucks. I mean, some of them are a little self-explanatory. In fact, I joke with clients and say, I get it. Unless you went to Esso on Halloween and bought candy and you're trying to pass it off as gas, it is gas, right? And you can justify that to us, but it's CRA is the one that you're going to have to justify this to, right?
I remember back in the day, people used to try and sneak through cigarettes as fuel.
No.
Like, no, where's the receipt on that one? And so that's the thing, is that we do need that line item detail, because it's possible, it is unlikely, but possible you bought something else from, Shell or Esso other than fuel. And, again, even when we look at Starbucks, you could go to Starbucks and it not be a business related expense, and you could go to Starbucks and it could be business promotion, or you could go to Starbucks and it could be advertising, right? So we really want to have that support if we need it. Now, these credit cards, the fact that we can pull in statements and we can automate the fetching of those transactions and be able to do bookkeeping in a simpler fashion is great. And the number one thing I'm going to advocate for here is, if you're going to do that, make sure you're doing that on a regular basis, so that you don't, hopefully you've kept the original receipt. You don't have to go back to it. Yeah, that's shoebox.
It's the shoebox method, yeah.
Yeah.
The other beautiful thing, actually, Andrew, about Receipt Bank is, like, if you also do online purchases, the Amazon, etc., you actually have customized email for Receipt Bank, and you can actually forward those invoices to your account. Right. So there's no excuse to be able to, to maintain this, and I get it. Sometimes clients may think this seems like a lot. I have to be having a corporate credit card. I have to separate. I have to this. But what you don't realize is that this is saving you time. There's a value on your time.
An ounce of prevention is worth a pound of cure.
Yeah. So it's really about being proactive to make sure that you're doing the right things, right? The other thing as well too, Andrew, even when we're looking at setting up a corporate, checking accounts as well as a credit card, sometimes I have clients that are concerned that, well, look, you know what? I have X amount of money sitting in this corporate checking account doing nothing, earning nothing. Or
Mhm.
sometimes clients are concerned that, look, you know what, I'm receiving the sales tax. And especially clients that are newly incorporated, right? If someone was full time, I always say there's a bit of that adjustment because when
Yeah.
you're full time, right, you get after tax money. So you blow
Yeah.
it, that's
Doesn't
okay. Your
matter.
taxes are held. But when
You
you're
you
newly
blow all your
incorporated,
income as a sole proprietor, you're in a heap of trouble because you don't have money for your taxes at
that
the end of the
is
year.
correct, right?
Yeah.
But then when you're incorporated and you're getting full money, right? You're getting the income, you're getting the sales tax. I tell clients it's very important that you're putting a buffer aside
Yeah.
to factor in for your taxes. Okay, make
They-
sure you
they-
don't touch whatever percentage you want to give it as that bit of that buffer. Some clients want to be able to, want to set up savings accounts, corporate savings accounts, which I say you can do if you want to save it. Again, very important that you make sure that that account is in the business name, or sometimes I have clients say, well, I want to invest it. And I said, that's great, but you can't take corporate money and put it in a personal investment. You want to get the gains of that investment, but not consider that personal income, right? So again, you can also set that up, set up an investment in the company name. Right, that's the most important thing. So
You
when
can
you
even do crypto NFTs under the corporation name. Like
there are a
it's
lot
just the key is making sure that you are consciously making an effort to make sure you're setting up corporate bank accounts, corporate investment accounts, corporate PayPal accounts. And this is an absolutely critical thing because if they're not under the corporation name, you're like, oh well, I meant that for the business. Doesn't matter what you meant it for.
yeah,
If it's not a corporate account, it's not a corporate account. That's just simply a matter of fact.
you're opening
And
yourself to challenges if you don't set these things up properly, right?
absolutely. And I love your suggestion of, hey, there's nothing wrong with opening multiple accounts, like a corporate checking and a corporate savings. So you're taking that money that you want to set aside for taxes at the end of the year and putting it into a separate account and being prepared for the end of the year. I think that's a great tip.
Yep, definitely.
And I think on that note, we probably, beat corporate bank accounts and credit cards to death. But it is a really important topic. I know people are like, well, why are you going to do a whole podcast episode on setting up a corporate bank account and corporate credit card? It's because we see people do it wrong all the time.
You would
And
be
it's a
surprised at how many
and it's a
people get
really
it.
costly mistake to make. So we are here to help you organize your finances, create wealth, and transform wealth into a legacy. So we hope you're finding this content useful, and we'll be back again next week with another amazing session. So we'll see you soon.
Good
Bye
to
for
see
now.
you, Andrew. Bye, guys.